The stock market deals with an Alibaba hangover. In today's cover story, the economic rise of Vietnam. Plus, protesters slam Wall Street over the latest hot topic. And Snuff said how regulators may kill off the last cigar factory in the U.S. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Tuesday, September 23rd. In today's First Look, investors find more reasons to sell than to buy. Monday, the blue chips had a triple-digit plunge, the NASDAQ 52 and the S&P 16. Gold lost $1 and oil 95 cents. The SEC is paying out $30 million to a whistleblower, the largest yet. GM says the families of 21 victims who died in crashes due to its faulty ignition switches are eligible for payouts. BlackBerry is ready to release a new smartphone called Passport. The company hopes it will be popular with police and healthcare providers. And Starbucks is testing a beer-flavored latte. Matt Shapiro, president of MWS Capital, is watching this market very closely. And Matt, what do you think? Some people think that the market's starting to look toppy here and the S&P could lose its sizzle. What do you say?
Well, you know, yesterday was a good little washout, kind of a hangover from the Alibaba IPO. And, you know, the one thing is the S&P 500 has become a little bit of a nifty glamour index so far this year with these concentration of performance in the highest weighted, largest capitalization stocks such as Google, Facebook, and Apple. So I think a lot of money managers and investors out there are skewing just a little bit too much into the S&P 500 because after all, remember the small caps, the general average stock, much smaller, hasn't done as well this year.
Alibaba is still the talk of the town, and that last check was up to $25 billion from its IPO, a new world record. Would you be a buyer? Where do you think this stock is going?
Well, actually, yes. I really do like the message of Alibaba, but of course, a little caution. It's already really big. There's no secret about the profit potential of these major e-commerce companies. But the one thing is, you know, talking about this fixation with growth, all the big money managers and the big growth funds will have to buy Alibaba. So 90 is really the price. Even those big managers that got allocations in the IPO will never have gotten enough as to what they need, and just wait, of course, until it gets added to all those indexes. So there's going to be endless demand for it. I think it's a great story, a great play on China. $90 is really going to be the price.
Thank you, Matt.
You're welcome.
Time now to say good morning to Chuck Coppola, who has an update on Apple.
Angie, Apple's launch of the iPhone 6 is the biggest in iPhone history. More than 10 million units sold in the first weekend. The phone's debut easily eclipsing the 9 million iPhone 5S and 5C models that debuted last year. Apple CEO Tim Cook concedes that if supplies of the new smartphone had been greater, sales could have been even higher. The phone is currently on back order for 7 to 10 days on Apple's website.
There is more to report from the tech sector this morning. Microsoft was supposed to launch its Xbox One in China, but in a last-minute decision, pushed it back to until the end of the year. Shares traded last around $47. EMC is one to watch today. The tech storage company is reported to be in talks with Hewlett-Packard and Dell. EMC stock closed at $29. And the Wall Street Journal reports Google has selected HTC to build its new Nexus 9 tablet. The last time HTC manufactured a Google device was in 2010. Shares fell $8 to $587.
With bankruptcy and liquidation looming, Radio Shack makes a distress call. The electronics store says it is holding talks with what it calls a major vendor that could aid the struggling chain in an out-of-court restructuring. Radio Shack has been attempting to bolster its balance sheet in the wake of declining sales.
It's a big week for economic data from the housing sector. Yesterday, August existing home sales came in with a drop of 1.8% compared to July, according to the National Association of Realtors. It follows 4 months of gains. Sales slipped 5.3% compared to a year ago. The Federal Reserve is holding rates at historic lows, but eventually that will change, affecting home ownership, according to Judd Kolko, chief economist at Trulia Housing Research.
Homeownership is certainly cheaper when rates are lower. Rates today are still near all-time lows. And remember, when rates rise by about a point, that adds a little more than 10% to the cost of the monthly mortgage payment. So rates make a huge difference.
Kolko adds that low rates have not been enough to spur on home buying. Many Americans are still challenged by finding a job or saving for a down payment.
In today's cover story, Vietnam is on the verge of an economic expansion. Its labor force costs half of what companies pay in China. The largest portion of its residents are in their 20s, and according to the Boston Consulting Group, Vietnam's middle class is set to double within 6 years to 33 million. The country is hoping to draw Americans there again as investors. A Vietnamese contingent representing business and government met with Midwest business leaders in Chicago, many of them eager to hear what Vietnam has to offer.
Look at Vietnam as a young population, like a very competitive labor cost.
Now there are virtually hundreds of U.S. companies that have manufacturing operations in China, and a lesser amount, probably in the maybe 3-4 dozen that have established in Vietnam.
As labor costs rise in China, Vietnam is touting a number of advantages. Its labor force makes about half as much.
And that's why everybody's here, because they see that and they recognize it.
Manufacturing accounts for 25% of Vietnam's GDP, twice that of the U.S. And next year, the Association of Southeast Asian Nations will create the AEC, a regional economic community, an Asian version of Europe's common market. But unlike the euro, the AEC will have no single currency.
In this common market, there will be 600 million people. So this will be the third largest block of population anywhere in the world after China and India.
Government corruption remains a concern, but anecdotally, some believe it is more prevalent at the local level than higher up.
The standard of corruption is less than a lot of other Asian countries, and it is decreasing.
A free trade agreement known as the Trans-Pacific Partnership is still in negotiations. Singapore's prime minister hinted that unless disagreements are resolved this year, the opportunity will be lost until after the 2016 U.S. presidential election.
A meat supplier is laying off hundreds of workers after a fast food scandal in China. Shanghai Hushi, a Chinese subsidiary of U.S.-based OSI Group, is letting go of 340 employees in Shanghai. 120 workers will remain. The company is under investigation for selling tainted meat back in July to McDonald's, KFC, Pizza Hut, and more. OSI Group says over the past 2 months, Shanghai Hushi has experienced significant financial and customer losses. Shares of Yum Brands, which runs KFC and Pizza Hut, are down nearly $10 since July.
The so-called father of ETFs is still on a mission. ETFs, exchange-traded funds, are investment funds traded on stock exchanges and are able to track a stock, bond, or commodity index. Recently, we spoke with Lee Cranefuss about the growing popularity of ETFs.
So they continue to grow because, number one, they're an incredibly good way to invest. Number two, the selection is far greater than ever existed for traditional mutual funds. And number three, there are a lot of different users. Traditionally, large institutions don't use what we call mutual funds. But there's a whole community of traders, hedge funds, dealing desks, pension funds that have applications for ETFs.
Globally, ETF assets are estimated to top $1 trillion by the end of the year.
Lawmakers are taking a break from Capitol Hill until November 12th as they campaign in their districts. Kai Sisson reports on a bill looming large on the Hill, awaiting their return that could ban online gambling.
When lawmakers adopted the Federal Wire Act in 1961, they outlawed over-the-phone betting in a time when the internet wasn't even a fantasy. Today, Vegas can come to the palm of your hand, worrying many of the problems that can arise. The Restoration of America's Wire Act, introduced by Congressman Jason Chaffetz and Senator Lindsey Graham, would modify the 1961 bill and ban online gambling nationwide, frustrating free enterprise advocates.
Well, we really see it as an overstep of the federal government when it comes to states' rights. There's already several states that have passed laws. They have legalized online licensed regulated gambling, and if this law is passed, their laws would be invalidated.
Though internet gambling is legal in only Nevada, New Jersey, and Delaware, the black market in America accounts for $2.6 billion, or about 10% of the world's online gambling marketplace.
Between 2006 and 2011, when it was arguably most heavily regulated or most heavily prohibited by the DOJ, people still gambled online.
Say no to internet gambling.
Proponents for the Restoration of America's Wire Act and the outlawing of online gambling include casino moguls such as Steve Wynn and Sheldon Adelson. Adelson is the founder of the Coalition to Stop Internet Gambling. He has reportedly hired an army of lawyers and lobbyists to restore the Wire Act and said in an interview with Forbes, My moral standard compels me to speak out on this issue because I'm the largest company by far in the industry. I won't get into the business because it is a moral issue for me. Adelson believes online casinos are suicidal to the U.S. casino industry, as well as being dangerous for minors and those with addiction issues. But experts differ on the economic impact.
Will online gambling increase traffic to the bricks and mortar casinos? Will it decrease traffic to bricks and mortar casinos, or will it not make much difference? And there's no consensus.
Kai Sisson, First Business News.
16 more states are looking to legalize online gambling. On the economic calendar for today, it's the FHFA Housing Price Index, and on the earnings outlook, Bed Bath & Beyond, CarMax, and Carnival Cruise. Still to come, the fight to save the last cigar factory in America. And will an IPO this week make Alibaba old news? Plus, why protesters are storming Wall Street.
For action on climate change. Today, world leaders will roll out new plans to combat global warming. The UN is making climate change a top priority in hopes of cementing a global agreement to curb carbon emissions within a year. Protesters are fired up. Hundreds took to Wall Street yesterday. Activists are pointing fingers at corporate America for influencing lawmakers to stall action on environmental changes. Sunday, an estimated 310,000 demonstrated in New York, what was called the largest protest ever on climate change.
Federal regulations may send the nation's last standing cigar factory up in smoke. Jackie Keenan rolls out the cigar saga from Tampa.
For more than 119 years, this factory has been making the same sounds, smells, and is rolling off the same product. This is the J.C. Newman Cigar Factory in Tampa, Florida. But the company may not be making these signature stogies much longer.
It would be very devastating if they had to close.
The FDA wants to impose stricter regulations on cigar makers. This small factory, which employs 130 people and makes 11 million cigars per year, would be subject to more inspections and testing on new products. Third-generation owner Eric Newman says it would be too costly. He says the factory survived the Cuban trade embargo, smoking bans, and taxation, but it may not survive this.
They would require 5,000 hours of testing for nicotine, chemicals, drugs, analysis, and it'd be impossible. We'd have to close this factory.
The Newman Cigar Company makes 7 different brands of cigars out of 4 factories, 3 of which are in developing countries. So if this factory closes, the company lives on, but the heritage of Tampa's past dies if this factory is silenced.
If it gets too tough, we'll close the factory because then we just make everything offshore. But I don't want to give up. Cigars are to Tampa like wine is to Napa Valley, like Detroit is the Motor City, we're the Cigar City.
Tampa was once the cigar capital of the world, home to more than 150 factories at one time. The demise of the cigar industry here started in the 70s. One by one, they relocated to other countries or shut down for good. Wallace Reyes shuttered his factory after a big tax increase in 2009. He says the industry in Tampa will be gone forever if the Newman factory closes.
The production of cigars, it was the last nail in the coffin.
Newman wants the FDA to view his cigar as a premium product.
Premium cigars, they would consider exempting from regulation. So what we are asking FDA is to treat us like a premium cigar.
Now Newman must wait and see if the last standing cigar factory in Cigar City can be saved. For First Business News, I'm Jackie Keenan.
The FDA is reviewing 82,000 memos that were sent to the agency protesting the new regulations. A decision from the FDA is likely in 6 months. Coming up, recent hack attacks that have cyber protection in the spotlight. Find out how to stay safe online. And the mega IPO that has been overshadowed by Alibaba. The biggest bank IPO in more than a decade prices in tonight. Royal Bank of Scotland spinoff Citizens Financial Group should raise at least $3.5 billion. Shares will go for around $23 to $25 and trade under ticker symbol CFG. Also getting ready to IPO, CyberArk Software. It's a cybersecurity company based in Israel. The stock will price around $13 to $15 per share. The ticker is CYBR. Bill Mueller has more on cyber safety. Bill.
The internet can seem like a frightening thing. Every week, it seems, there's another alarming report of hackers doing their dastardly best to steal money and identities. Many people, they take minimal steps to protect themselves and their accounts and hope for the best, other than changing your password, every 10 minutes or so these days. They don't know what to do. Well, there's a book out about that. It's called Identity Theft Alert. Explains the threats and the practical steps to inoculate yourself from the bad guys and their wily ways. It was written by Steve Weisman. Now, Steve, I have a question. The U.S. is still using what is basically an outdated credit card system, way behind what the Europeans have. Are you surprised that we haven't upgraded that? Because that is being breached almost weekly.
Yeah, that's like fingernails on the blackboard for me. I'm not really surprised, but I am disappointed because it's solely a matter of money. What the companies do, they don't lose money as much as they say the retailers do on this. They pass those costs on to us. Come October 2015, the regulations are going to change when suddenly the retailers are going to be responsible for their own negligence.
They put a lot of effort into being ahead of what everybody else is trying to do to stop them.
They do. They are always a step ahead. That's one reason why when we had the Home Depot data breach, Home Depot first announced, we're investigating. They couldn't even tell that there had been a data breach. What happened was banks monitoring fraudulent card activity found it out, traced the common denominator back to Home Depot, who hadn't heeded an FBI warning from July. Watch for this type of software, watch for this type of malware, do this, but they didn't do it.
All right, Steve, what should we be doing other than changing our passwords regularly?
You know, passwords and security questions are still critical. Apple is kind of leading the way. They're looking towards biometrics. You're going to have a new thumbprint on your new iPhone, which is terrific, except for the high-tech hacker who will take a piece of Scotch tape, put it on top of someplace you've put your thumb, like your iPhone, lift it, and be able to use it. So biometrics is coming.
So you think for now, password protection is the best thing?
It really is. Have a good password. I say in the book Identity Theft Alert how to do that. Have good security questions that people can't just get the answers on the internet for. And that's the best you can do right now.
All right, Steve Weisman, thanks for making us safer.
My pleasure.
Still ahead, a trader picks out buying levels in the bonds. That's next in Chart Talk. Colvin of RJ O'Brien joins us on this Tuesday morning. Good morning, and you're here to talk about the correlation between the 10-year yield and the S&P 500. Let's start with that 10-year. What's the buying point here?
Well, good morning. I think right now we're seeing 10 years hover in a post-CPI level 255 that we saw yesterday. It's going to hover between 2.5 and 260, probably for the foreseeable future until we get some data that pushes one way or the other. I like buying 10 years north of 2.5%, and I'll tell you why. First of all, I think the risks around the globe are continuing to rise, and treasuries are a safe haven. Secondly, a reach for quality yield from pension funds, insurance companies, and money centers. They want what's quality and what's out there. There isn't a whole lot of supply out there right now still, so they're looking to buy up and gobble up high-quality 10-year notes. And lastly, I think the Fed has shown its hand in that inflation is going to be a key indicator. And last week's numbers of lower inflation helped kind of flatten the yield curve, which means benefiting 10s and 30s. So I think right now, heading into year end, anything north of 2.5% is a buy. I think we do see a spike lower in yields before the year is over.
Do you think people are still being pushed into the S&P 500 into equities?
Well, I think as you start to see risks rise globally, you do start to see stocks benefit. Now, the reason being is that while 10-year Treasury yields drive so low, there is still a need for return and a mandate for return. So you're going to see equities outperform as they have since the Fed went to the zero interest rate policy. I think looking at stocks at 1985 in the S&P specifically, that's not a bad buying area, probably all the way down to 1975, because if you look out the curve here a little bit, we do see the end of tapering in the October meeting. We do get another couple of Fed meetings, and the Fed has already set the levels. So if we don't reach those growth levels and the Fed has to stay on hold longer than expected, then stocks are very undervalued. And I think as we move closer to year end, the market's going to come to that, and we're going to see a new high for the year.
Thank you, Ted. That's it for now. Coming up tomorrow, and don't miss this, a hedge fund manager who spent more than $600,000 to have lunch with Warren Buffett will be right here to talk about value investing. From all of us at First Business, have a great day ahead.